Interest rates and inflation together are perhaps the most significant macroeconomic variables that impact global financial markets, particularly money and debt markets, more so given the free flow of capital across countries and the consequent emergence of globally interconnected financial systems. As a result, managing price volatility and interest rate risks embedded in instruments traded in the money and debt markets have become exponentially more complex. Hello, my name is P.C. Narayan. I have been with the Indian Institute of Management, Bangalore for the last 14 years, engaged in teaching, research and consulting primarily in the area of banking and finance. In this course titled Money and Debt Markets, Concepts, Instruments, Risks and Derivatives, we will examine in detail money markets or short-term financial markets such as call money markets, T-bills markets, repo markets, etc. that make up the ecosystem to effectively manage money supply, that is liquidity, and ensure stability of the financial system in the short term. The second part of this course will look at debt markets, the underlying theories such as time value of money, bond pricing, bond valuation, as well as the structure and functioning of debt markets such as the corporate bond market, the government securities markets, or the treasury bond market as it is called in some countries, and the mortgages market. We will also look at various types of interest rate risks that are embedded in the instruments traded in those markets and the tools and the techniques to manage those risks, such as repricing models, duration and convexity, duration gap analysis, etc., as well as interest rate derivative instruments such as interest rate futures, interest rate swaps, interest rate options, and their role in not only helping institutions to hedge against those risks, but also to speculate and make some additional profits where possible. So, join me in this interesting journey to unravel the structure and functioning of money markets, debt markets, and the manifestations and the impact of interest rate risks on those markets. How are they managed, and to what extent can they be mitigated? I look forward to seeing you in this course.